We start. Yeah, good evening all. So, welcome to this pulse session where we had analyzed that can the package from the stimulus package from the finance minister, can it set the pigeons amongst the cat? Can it set the cat amongst the pigeons? And luckily, we had planned it, and today only we've heard an announcement that there could be some announcement from the FM and the PM office on the taxation of FIs and some of the other most hurting issues like consumption on autos, some relief there, and some other measures which can shore up the confidence and sentiment on the stock market. So I would start that by saying that we've been through this rocky phase where despondency, capitulation is playing out perfectly. And from the budget, the markets have been on a one-way ticket from 12,000 you are down to 10,700 on the huge sell-off which has been there from the FIs. They were disappointed with the FPI taxation and no redressal on that. Now, for 400 crore worth of revenue, we've lost almost 2.5 lakh crore of market cap, which is quite disturbing. On the other hand, the earnings have been lackluster, and you've seen a slowdown in autos and other consumption-led areas. Even companies like Parle and Britannia indicating that even biscuit sales are on a weak note. But I think part and most of it may be in the price, since we've seen despondency in the mid caps be huge underperformance. So my call would be that I think the night is darkest before the dawn, and that is where we are. I think the next 2 months can see a huge amount of initiatives from the government, which will mean the redressal of the FPI. There can be a stimulus on autos through GST and other cuts, and a large part of the mistrust created by the NBFC fiasco, that being done away with by more ease on lending from the institutions banking to the end user. We've seen that gap has not got filled, and even though cost of money is at the lowest, the transmission is leaving a lot of issues. I think that is just round the corner. Already you've heard banks now in 59 minutes give loan approval for autos and so on. And we think that globally there is a wall of liquidity. Now let me tell you that 8 countries are giving negative yields, meaning if you put your money in a German or a Danish bank, you would have to pay them to keep the money. So it's a time when actually there is across the globe there is hardly any growth. At that time, 5.5-6% on GDP from us would be still reasonably okay. But we know that there is a lot of pain on the side of our economics also because of the slowdown, and that's a global phenomena. But we've heard from 5 central banks that money printing or quantitative easing is on the cards. First was been the EU, which has stressed that in September there will be further rate cuts, and that could actually instigate again some growth in Europe, which has been the elephant in the room. We are talking of easing from China, Japan. Now Germany has put $55 billion, and fourthly the US, where President Trump has been tweeting about Jerome Powell, the Federal Reserve, not being apt with the market and not cutting rates sharply. So I think there are cases of huge liquidity which can come into the market in the next 2-3 months, which means that riskier assets like equity can stand to gain. And I would say that October, November should start to see globally equities outperform, with 2020 setting the base year for being one of the best in equities over the next 2 years. Now, in the Indian context, we know that the big issues have been FPI taxation and the consumption slowdown in autos not being addressed, and other real estate and other issues on both the durables and discretionary spend. But I think the government is going to take the bull by the horn. I would expect some big reliefs in the next few weeks. Today, maybe they address the FPI issues, and we know that should set the ball rolling. Now, also to give you some more color, China is planning a big stimulus, and today you saw metal stocks rally very sharply. The metal recovery was twofold. One, iron ore prices have fallen, which are the input cost for steel. And secondly, the China stimulus is hedging towards more production of metals and consumption, which again could sound good news for all the ferrous and non-ferrous players. And in the Indian context, it could mean stocks like Tata Steel, JSW, Hindalco, which have been borne the brunt of the sell-off, could actually do well. Now, there will be another positive if autos get a relief and they start to do well. You've heard from the likes of Mr. Rajiv Bajaj on how 5-7% is not a crisis, but I think the UN cry is immense with them always used to double-digit growth for the last 7-8 years. I think this is a passing storm, and I think it's more cyclical. We are headed towards a festive season, and I think November, October onwards, you should see very strong traction on all autos as far as consumption goes. There has also been clarification from Mr. Gadkari on parallel. There no embargo on closing down of diesel or fuel against EVs, and they will let both those segments work. From what I know from Maruti, they are saying EVs are at least a 4 to 5 year away period, and they've seen all their BS4 inventory get off. So they are looking for a very, very positive and robust festival season with inventories overhang going, and they are seeing a lot of positives come on that. So what else should be the key? Then you are seeing consumer durable, discretionary, and uh, staples. All three will be where the government can initiate a lot, and I think that the missing link of consumption should be back from the next month and so on. In the meantime, these stocks have traded at much lows, and one of my recent plays, which is ITC, has underperformed due to sales weakness in cigarettes and some talk of the biscuit business also. But ITC is not it's a huge play on paper, on hotels, on all the other businesses, and I think definitely this is a time to accumulate ITC for the next 8, 10, 12 weeks. You will definitely make money after maybe another 3, 4 months. And these are not times to sell; these are times to buy actually ITC. So if I could, give you some more names, I would say that if you are planning, then please don't discontinue a SIP. Keep it going. Start adding more. In fact, I can categorically say that these 8 weeks may be the last of the bottoming of the market, and you should be looking for much better levels from October middle to October, November for the next 18 months. There will be better improvement in earnings, macros, consumption, and the government can herald a lot of positive. There is also talk of LTCG coming back with a 3 year view, which will actually set the cat amongst the pigeons, which will give huge longer term money coming back into India. And I spoke about the negative yields globally, which means that if you heard yesterday, SEBI had come out with a huge statement on allowing central banks now to invest as foreign portfolio investors. This actually is the beginning of setting the tone for overseas borrowing, which the government talked of in the budget. And I think today, if you raised for 50 to $100 billion, it will be the lowest we've at a lowest cost we've ever seen, because cost of money is low and there will be a sporadic buying for Indian type of paper, particularly government sovereign paper. So I think these could be the dark signs over there, dark horses over there. We also are aware that yields and cost of money are at the lowest we've seen. It's just that the pass on effect, which the government is undergoing a lot of efforts to see, is going to see, and we've seen a cut in the MCLR from across the board banks. Now the top problem is that how do we get the liability franchise lower? And there was a good article yesterday from the Niti Aayog which said that the EPFO or the provident fund yields are set to drop by from 8 to less than 5% in the next 3 years. Once that starts to happen, you will see cost of deposits falling very, very sharply. And I will, in the near term, also expect cost of money on the deposit franchise on the liability side to start to reduce. So I think it's an ongoing process, and you will see the silver linings in the next 3 to 6 months, where the pass-on effect of liquidity will be very, very huge. With the lower cost, actually spending will spur spending in a lot of industries and products across the board. Now, like I said, please keep your SIPs going. Please invest in mutual fund. In fact, up your outage now. Do your PMSs, do your portfolio investments, do your mutual funds, because this is the time when actually you've been waiting for to buy. And dark is darkest before the dawn. That is what my saying is. So Reliance has been a trendsetter. Reliance, Ultratech, HDFC, IndusInd, L&T, Sun are some names on the large caps, which I think will give you a very good outcome if you do a SIP for the next 10, 12 weeks. In mid caps, it would be Ambuja, Ashok Leyland, IDFC First, LIC Housing, Nestle, Lupin, which actually can outperform. But again, a SIP would be the ideal pay. Now, the SIP generally people start off, but problem comes when the markets fall. They tend to get wary or fearful there. A SIP means that the next 10, 12 weeks you have to do this. And please continue with your longer term SIPs because there is no alternate to equities. We've seen local flows be strong. And generally, if I took out historical data, such big sell-offs from FIs have always seen a 7 to 8% rally on base levels. So I don't rule out a 1,000 point rally coming after October on the Nifty easily. And I'm extremely positive in by the end of the year you would be in all green and definitely more optimistic and positive on the market. So we are saying this is a passing storm. It's a cyclical slowdown. We will wait for the government outlook on that. That should be positive, and we will take it from there. Now, select banks, you are aware, Yes Bank has been the eye of the storm. Even though it raised money at 84, it has hit 54 levels, which is fairly startling. But, I think the management has been extremely weak on its PR basis and has played to the media galleries. I mean, you didn't have to announce how much you're going to raise, 10 billion, $1 billion, and then, so a large part of this is in the price. And I think now the private placement, which they talk of, that should be the bottoming out of that stock. Now, if you have a slightly longer term view, one of my favorites, IDFC First, is doing very well, and I continue to think that should be an outperformer. Along with that, Federal Bank and as a dark horse, PNB can be a relative outperformer given that their asset write back should be strong. In the large cap, it has to be HDFC, ICICI, and IndusInd Bank. IndusInd Bank can be a dark horse along with Axis Bank. Both are giving you a very good price entry point. And we know that IndusInd has been one of the largest lenders on the CV cycle. And if we get an impetus from the government, that could actually be a positive. IndusInd also does most of its provisioning from ILFS, and anything as a recovery would be a write back. On Axis, again, we've seen that they are in the process of raising more capital, which would mean that their franchise going forward would be very, very positive. So at these levels of 650, doing a SIP over there is also going to be very, very fruitful. On autos, I think Maruti has set the cat rolling. They've been extremely positive, and I think that Maruti can be a huge outperformer in the next 1 year. So again, over here, the next 8-10 weeks would be very crucial because we have the festive season, and the price entry has been is a very, very good entry level around the 6,000 levels and below. Ashok Leyland, Hero Motocorp, and Bajaj Auto would be other plays which we think can play out positively on the auto side. On capital goods, I think L&T will be the prima donna along with Siemens and ABB. Continue to be in that. M&M is again a very, very good value play given that their new launches have been well received in the market. And at a time of so much of pessimism, actually MG Motors and Kia have stolen the race. They've been oversubscribed and they've closed booking. So I think the consumption aspirational levels will see a lot of demand coming back in autos. And this could be one of the entry points into one of the best wealth creators in the last 8 years. The other point of concern which we have raised is that the broader market underperformance. Now I can reiterate, I think 2020 will actually belong to mid caps, and if you have a 2-year view, you will make a lot of money. Maybe not 2 times, 3 times, but more than that if you can be in good conviction ideas. LIC Housing is a very, very prominent play. It's raising money at the lowest cost today in fixed deposit and other methods, and their franchise and loan book is expanding at the fastest. Another would be Ambuja Cement, where again cement numbers have been very firm, and we think now from the festive season you should see after a very good monsoon, a lot of positives play out on the construction side, both in commercial and in the private space, and that should again see cement consumption and prices both on the positive side. Ultratech in the large caps and Ambuja on the mid cap would be a good play. The other wind would be Sun Pharma on the large caps and Lupin on the mid cap side. Nestle has been one of my top picks. Nestle, Dabur, Tata Global in the mid caps, in the FMCG play. And like I said, JSW, Tata Steel, and Hindalco could be beneficiaries of this China coming back on a lot of things on the on instilling growth on the metal side. So I think we've summed up a lot of things. I am actually of the view that today could be a trend-setting day, and if we get something on the FPI taxation, that could do away with the negatives for the time being. The other positive would be in the next week or 10 days, we will hear announcement on the consumption side, which could spur a lot of pessimism into optimism, and lower could actually see the return of the consumer in all the three places: uh, uh, discretionary durables and staples, and that could bode well for the market going forward. PSU stocks have been on a losing wicket. I still think that the CPSE ETF is a must buy. I know it's been very, very difficult on certain stocks. We had been positive like NBCC and others. And I still think NBCC is going to be a huge value creator over a period of time. Given that now they are getting the JP business and the others, there has been a transition because of the change in management. From what I heard, that the ex-executive director of rights is now going to take place over there. So please keep your faith, hold. We will get more color once we meet the new management. Just for the next week, I'll give you more color on that. But please stay on that course. And if you can do a SIP for the next 8-10 weeks, it would be ideal. On some other place, we are saying that try and keep a basket, do the Nifty, do the Bank Nifty, because that actually constitute most of the blue chips on both sides, and they could be sharply giving you an upside given that cost of money is at the lowest. I would also urge that if today I may not be able to answer a lot of your feedbacks, but I am giving you my mail ID. So please feel free to give me a feedback or any queries, and I will be definitely looking into each one of them and giving you a reply on that. My mail ID is sanjiv.bhasin@ifl.com, and I will definitely look into that. Insurance is, again, like I mentioned in my last 2-3 pulse sessions, insurance is a no-brainer. HDFC Life, SBI Life, ICICI Pru, and ICICI Lombard would be four outperformers. And please keep your faith in the insurance basket, because they can be huge wealth creators in the next 3, 4, 5 years. On NBFCs, I think HDFC, LIC Housing, Mahindra Finance, and again as a dark horse, L&T Finance, which is pedigree and which is trading now at a 50% discount to the mid cap valuation. Three stocks, LIC, L&T, and Ujjivan. On holding company discounts, they're trading at huge discounts, and the businesses are very good. The managements are excellent, and there is no liquidity issues over there. They could be dark horses. On stocks which are trading at discount to 5-year average price earning, it would be Sun, Tata Steel, M&M, Gale, Eicher, Dr. Reddy, and Indusin. Now, these are trading at discount to 5-year average price earning. And stocks trading at premium to 5-year average are Britannia, Titan, Wipro, Reliance, Bajaj Finance, Infi, HDFC, Hindustan Lever, Asian Paint, and TCS. So you've got your basket full wherever you want to be. But I still think that a mix of both would stand you in good waters. Hence, doing a mutual fund or our own PMS is extremely positive on that. I know Federal Bank has been, but I think Federal Bank is proxy to the lowest cost of money which they get through the NRI scheme from Kerala, and that should be a no-brainer at these 80-83 levels. Again, a SIP there would be very, very ideal. On India Bull, it is difficult to give a commentary till they get that merger through. But I think, these names which we've suggested, namely HDFC, LIC Housing, M&M, these should stand in better stead in the immediate future. On microfinance companies, people are very, very bullish on Ujjivan and Equitas. And we think the best proxy play for that Bharat Financial merger with IndusInd is IndusInd itself. So my overweight on banks is going to be IndusInd. And I think that will make a lot of money on the large caps, and IDFC first on the mid caps. I think, since we've had to have this session before the 5 o'clock breaking news, I will be trying to answer all your questions. You please mail them to me. I've given you my mail ID. I'll send out again. But please keep the faith. I think these 8-10 weeks will be the last you've seen of this chaos and capitulation. And I would be very, very bullish from this somewhat Diwali session onwards. And I think you'll be happily invested for the next 18-24 months. So whether it's a SIP or a mutual fund or a PMS or your outright buys, keep the faith, stay there. And keep watching, keep doing your regular process of investing. Don't try and time the market, because anybody who tells you a bottom is either a fool or a liar. And secondly, bottoms are made in hindsight, and hence we think that these are time where capitulation is mostly played out on the market side on large mid caps and some select large caps also. So that would be the end. I will try and give you a feedback on a lot of the other stocks, but I've given you some of the names. I'll reiterate those: Reliance, Ultratech, HDFC, IndusInd, L&T, Sun, Maruti on the large caps, and Ambuja, Ashok Leyland, IDFC First, LIC Housing, Nestle, and Lupin on the mid caps. These could be preferable plays. If you have a query, please write and sell me. Uh, when you get this wall of liquidity, and I've been through the market for 30 years, I've seen pessimism is at its highest. But when so liquidity comes, then riskier assets and equities tend to outperform, with emerging markets being the prima donna. Now, for India, it would be a double positive if the government can step in and reinitiate the confidence through the stimulus which they are planning on consumption consumption revival over here, which would mean autos, real estate, and some of the durables and discretionary part. We know that the rollback of the FPI will give immediate relief, but don't expect overnight, pessimism to turn to optimism. They will be the pessimists who will go on. It will take 2 months, but I can reiterate, after October, you should be headed for much better times for the next 18 months. Again, I'm reiterating and giving you my mail ID. Please send me all your queries and I'll answer each of them without fail, and we'll take it from there. So with this, I think I will come to an end with this program, and we wish you all the best, and we hope that you stay healthy, wealthy, and look forward to a robust Diwali where we think the market will be in much better shape. Keep your sips going, and wish you all the best.